Let's begin this morning on Wall Street, where markets are rallying in light of new inflation data that just came out this morning. It showed inflation held steady last month, with prices ticking up less than expected. The new consumer price index shows inflation rose by 0.2% in July. That number is below where investors thought it would be, and so is the 2.7% increase over the past 12 months. CBS News MoneyWatch correspondent Kelly O'Grady is joining me from the New York Stock Exchange this morning to break it all down for us. All right, Kelly, let me get your first impressions of these numbers.
So look, I think it's broadly good. There were a couple of things when you poke around under the hood that I'll get to in a second that did raise some red flags. But you can see investors were a bit concerned coming into this report thinking, oh gosh, is this when we're going to see that really big jump from the tariffs? And we only saw it in a few places. So you mentioned that headline CPI number, 2.7%, exactly what it was last month. We want to see that go to 2%, but we're happy that it didn't climb higher. And one of the big reasons is that energy continues to bring that overall inflation rate down. We are seeing energy prices drop, and that's being reflected in the fact that that 2.7% stay the same. Where I did feel a little bit of concern is in what we call core CPI. So core is when you strip out energy and food prices, because those can be pretty volatile, and you look at how deeply rooted inflation is in the rest of the economy. And that actually came up to 3.1%. That was higher than expected, and it is a bit higher than the 2.9% that we saw in the previous report. And so that's where you can see some of the impacts from tariffs. We're seeing it in higher prices in the furniture index, in motor vehicle parts, in footwear, things that we get from other parts of the world. So the way that investors are looking at this is, okay, there's some areas that are showing concern. It is not out of control crazy, but remember, we did have higher tariffs go into effect last week, August 7th. Even for the countries that we have deals with. So economists are saying, let's wait and see what the next 3 to 6 months bring and how much companies can continue absorbing of those higher costs, Vlad.
All right, let's talk about something that you and I discussed yesterday, Kelly, which was those tariffs for China. We speculated that perhaps the president might pause them. What did we learn this morning?
So we were on a 90-day pause with China. The deadline was yesterday, and we are on another 90-day pause. So both sides can continue negotiating. This is also sparking a lot of relief from investors. Remember, at one point, we had a 145% tariff on goods coming from China, one of our major trading partners. Imagine what that would have done to inflation or trade. It probably would have stopped it altogether. So right now, we're going to sit at 30% for the next couple of months while both sides come together. But it wasn't just U.S. investors, Vlad. The Nikkei, that is the exchange over in Japan, hit a record high. People were celebrating. Glad to see that this didn't escalate into a trade war. But again, this is a wait and see. This is really the big one that we're all waiting for.
All right, Kelly O'Grady reporting live from the New York Stock Exchange for us. Kelly, thank you. All right, let's talk a little bit more about that 90-day extension in the trade war between the United States and China. And for a look at the global perspective, let's bring in CBS News foreign correspondent Ramy Inocencio, who's live from our London newsroom. Ramy, so what's been the reaction on international markets?
Hey, yeah, Vlad. Well, it's a relief rally, especially for Asia, which got the first reaction to this news here. China markets on the mainland and in Hong Kong closed higher with that tariff can kicked down the road for another 90 days. Meantime, in Japan, as we just heard from Kelly, the Nikkei 225, the main benchmark there, hit a record high. Investors relieved there, and also here in the UK and across Europe. Most indexes are higher. Investors here in Europe are relieved that China won't actually try to start dumping its goods here in this region if that tariff war had kicked off between the U.S. and China. If that had happened, if there was dumping here, that would push prices down. Prices down are good for consumers, right? But it would be bad for companies and, of course, their profits. And the U.S. markets right now, as we're seeing, are higher above the board.
All right. And what has China been saying about all this, Ramy?
Yeah, well, for China, they are taking this kind of measured reaction. Positive, but it is measured. The foreign ministry said that Beijing hopes that Washington will strive for positive outcomes, and then based on what they're saying is mutual benefit. And it is this mutual benefit in the near term, Vlad, that averting tariffs of over 100% against each other would be some kind of win-win situation over the long term. And I got to say that the timing of this pause is notable because not so much what's happening now in the summer, but because of the December holiday season. Over the next few months, U.S. retailers will be stocking up on basically a lot of Chinese imports in order to get those over to the United States. So this pause means that those companies won't have to make that kind of devil's choice, if you will, to pass on higher costs to U.S. consumers or potentially to have to eat some of that when consumers will be buying things for family and friends. Conveniently, Vlad, this new extension expires November 10th, just when people are starting to get into the idea that they've got to buy things for their friends and family.
And before we let you go, Ramy, what about the prospect of a meeting between Trump and China's Xi Jinping?
Sure. It's basically still on the table. Not turning the screws on these tariffs keeps the mood a bit less tense, keeping the door open there. We know that they've met 3 times in the past. The last time was quite a long time ago, though, in 2019, before COVID. We're looking ahead to this October or this early November, where Trump could meet President Xi in South Korea. This is during a major economic summit of Pacific Rim countries known as APEC. He might also try to get to China before APEC. So that is very much on the board. There are things that both sides want, things from rare earths on the U.S. side to semiconductors for China, soybeans for China. So all of this need potentially leads to negotiation, which could potentially lead to some kind of bigger U.S.-China trade deal.
All right, Ramy Inocencio for us, reporting from London. Thanks, Ramy.